the many reasons to be bullish on gold, which are coming into play now, like the weakening labor market, the signs of the continuing manufacturing recession, yes, the global recession, which is harder to deny than the US troubles and so on. All of that is very bullish on gold. But sign of the times, I'm very bullish on gold. And it's exciting and a little bit scary that we're going into such a bullish context from an already high gold dollar exchange rate. But I see it the way I see it, so I'm putting more money on the table on this bet. I'm putting my money where my keyboard is on it.
Gold and silver prices surged in early U.S. trading on Friday, driven by increased safe haven buying interest to close the trading week. Gold is on track for its most significant weekly gain in 13 months. The broader market's risk appetite has declined this week as the Russia-Ukraine conflict intensifies, with both sides deploying longer-range missiles and Russia issuing nuclear threats. Lobo Tiggre, editor at the Independent Speculator, has been surprised by the many factors currently supporting a bullish outlook for gold. Interestingly, Tiggre observes that gold's upward movement began even before the full impact of these economic challenges became evident. In hindsight, he attributes this early surge to a substantial increase in central bank gold buying, which intensified following the invasion of Ukraine 3 years ago. Though not a new trend, this surge in central bank purchases became a far more significant market driver than Tiggre had initially anticipated. After a 2-week decline following Donald Trump's election victory, gold prices staged a strong comeback this week, rising in every trading session and gaining nearly $150 by Friday afternoon. Goldman Sachs anticipates further gains in 2024, projecting gold to reach $2,700 by the end of the year, driven by safe haven demand amid recession risks. Citigroup and UBS also forecast a positive outlook, setting their average price targets for next year at $2,800 to $3,000 and $2,365 respectively, citing factors like easing inflation, lower real yields, and sustained investment demand. Tiggre notes that the current economic data clearly supports his bullish thesis, but gold is trading significantly above his initial expectations. Instead of being in the $1,900 to $2,000 range as he originally anticipated, it's now moving toward $2,700. While he remains optimistic, Tiggre admits that advancing from such elevated levels makes him uneasy. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
For the year's rally, what surprised me is that the many reasons to be bullish on gold, which are coming into play now, like the weakening labor market, the signs of the continuing manufacturing recession, yes, the global recession, which is harder to deny than the US troubles and so on. All of that is very bullish on gold, but gold went up before these things became manifest. So that was a surprise. And we now, in hindsight, have a pretty good idea that it was central bank gold buying, and that wasn't new. But it escalated and it became a bigger factor than I anticipated. Like really, the central bank gold buying shifted gears with the invasion of Ukraine to now 3 years ago, right? So that wasn't new, and I didn't expect it to really change the market this year. Like why would that become a hockey stick event in 2024 when the war started 2 years before? But it did. So that surprised me. But fortunately, it was a good surprise. It helped. And the good news for gold bugs is that sort of set a higher floor. Like all the reasons that I was bullish for gold for this year, they're now, I think, coming into play. We're seeing them in the economic data. But instead of gold being 1,900 or 2,000, it's 25, 26, 27. Right now we're headed back for 27 as you and I speak. So, it makes me nervous. It's much more comfortable to be a gold bull when it's down. Oh, it's going to go up than it's near all-time highs. But for what it's worth, dear audience, I do think that all those things that made me bullish on gold, they're still on the table. They're visibly coming into play now. Yeah, that we're going into it from a higher base. It makes me nervous, right? But it also means that the upside there. I mean, think about it. It's not just tinfoil hat Lobo who says that gold's going higher. It's J.P. Morgan and Goldman Sachs is agreeing with them of about $3,000 gold. I just saw an article today, a very silly article about some AI predicts when gold will hit $3,000, which like one AI was asked a certain question that gave this answer. It's like, but it must be a good prediction if AI predicted. It's just so silly. Yeah. But right? Well, I'll tell you. But it's interesting that if you're going to grab a headline, you want to include what? AI and gold. So that tells you something about it's a sign of the time. And B, the nature of the question wasn't when is gold going back to 2,000. The question was, when will it hit 3,000? When will it go up more? So, I mean, this is out there. This is becoming one of those ideas whose time has come. For what it's worth, this particular AI predicted December of next year, but I'm not saying it will. I'm just saying the right things happen, the right scary event in the Middle East or Ukraine or whatever. But sign of the times. I'm very bullish on gold, and it's exciting and a little bit scary that we're going into such a bullish context from an already high gold-dollar exchange rate. But I see it the way I see it, so I'm putting more money on the table on this bet. I'm putting my money where my keyboard is on it.
The U.S. grapples with escalating fiscal challenges as the national debt exceeds $35 trillion. The Federal Reserve's revenue currently sits at $3.27 trillion, but spending has ballooned to $6.75 trillion, creating a substantial deficit of $3.48 trillion. With the potential return of Donald Trump to office, there are fears that government spending could increase further, worsening the nation's debt burden. This scenario might pressure the Federal Reserve to cut interest rates to manage the fiscal imbalance. Trump's economic policies, marked by aggressive tax cuts and tariffs, could initially create market excitement, but they are unlikely to overshadow the Fed's rate cuts in the long run. Lobo Tiggre anticipates that Trump's policies could fuel inflation in the near term, benefiting real assets such as gold and other commodities. While he remains in the camp expecting a hard economic landing, he also sees the possibility of a reflationary boom in 2025, which he believes would be favorable for metals, particularly gold. Now let's redirect our attention to a video.
There's a lot of hope. Elon's Doge joke. I mean, there is no such Department of Government Efficiency. It's a joke, the Dogecoin, and he just came up with it. I mean, it's not that Trump says we'll call it this. It was Elon came up with this name because he likes that Dogecoin. There's no such thing. It's just Elon and Vivek giving Trump advice, okay? But this isn't my number, but I've heard an estimate on Bloomberg Economics. If they fired every single federal government employee, not thinned it by 10% or like fired every single one of them, it would only impact the federal budget by 15%. So, and you obviously can't do that, right? So just, temper your expectations, right? So, and if they do manage to pull back some regulations and unhinder the market so that we can have a flourishing of free market, free enterprise and entrepreneurship and creativity, that's great. It doesn't happen overnight. Like even if they do it, right? Even if they shut down some department that shouldn't be there, right? It's going to take probably years before you see that trickle down through the economy and have a beneficial effect. So for the immediate investable time frame for me, which is a year or two. Rick invests for 5 years, Rick Rule. But for me, it's what's happening now. So I think these things set the stage for interesting things to come. What's happening now, what's investable now, is that Trump's agenda is inflationary. I mean, we're looking at potentially bigger deficits than even under Biden because he wants to cut taxes and he may have enough of a majority to do that, but he's not really talking about cutting spending. I mean, the efficiencies that Elon hopes to achieve are if not when questions, and I doubt they'll be anywhere, even if I'll be gobsmacked if he can cut, not just decrease the increase, which is a cut in Washington speak, but actually cut spending. I'd be gobsmacked if he could cut government spending at all. Like 0.01 would astound me. So in terms of what's happening now, what we're looking at, I think it's inflationary. This is good for real assets, including gold, but also other things. I think with or without the hard landing, I'm still kind of in the I'm still in the hard landing camp, but I think we have a reflationary boom in 2025, one way or the other. This is good for everything real, including metals, including gold. So I don't have a price target for you, but I do think that gold goes higher in 2025. I think silver goes with it, though it may underperform at first. And we're close enough that this isn't a target, but I have said before, and this is sort of my guidance, I'm not worried about gold where we're at. I'm not worried about 2,800. Once we start hitting above that round 3,000 number, I'm not saying that's the top. I'm just saying that's when I start thinking this has gone far enough that the upside risk might seem smaller than the downside risk.
Gold has long been regarded as a valuable financial asset and a trusted investment option. Today, it is not only favored by individual investors, but also by central banks. Gold's role as a hedge against inflation and its reliability compared to fiat currencies continue to drive substantial investment demand. Despite the global trend of low or negative interest rates, gold, which does not offer interest, remains an attractive alternative to bonds and cash. During periods of geopolitical or economic uncertainty, gold often experiences an uptick in demand as a safe haven. Gold surged to record highs in 2024. But what's next for the yellow metal? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.